Hey, welcome back to The Dive. U.S. jobless claims, inflation, gold, silver, and the price of oil in terms of the dollar are some of the topics that our guest will deep dive into today. He is the founder of Goldmoney and a longtime advocate of gold as money. James Turk is joining us today. You can also check out James's latest book, Money and Liberty in the Pursuit of Happiness and the Theory of Natural Money. It's in stores today, so don't forget to check that out too. Hey James, welcome to The Dive.
Thank you. It's great to be here.
Yeah, it's so great to have you on. Okay, so let's start with the job market. It's a tight market where job seekers have the leverage over employers. How do you view the job market in the context of where the economy is heading?
Yeah, well, I think the economy is headed toward a recession. So if I were a job seeker, I'd be looking pretty hard to get a job that you feel has security, because I think there's going to be a rise in unemployment in the months ahead, probably by the end of the year, given the slowdown in economic activity, which is a little bit strange to say because there's still a shortage of jobs and a high demand for workers. But I've seen in the past how this can change very, very quickly in a short period of time. And given the trends in the economy at the moment, which are slowing, it is worrying about the future for employment.
Okay, so let's shift to inflation. Janet Yellen said in an interview that she was wrong when she anticipated inflation would be a small risk, manageable, and not a problem. How big of a problem is inflation?
It's a big problem. I give her credit for admitting that she was wrong, but unfortunately, she didn't explain the reason for the inflation, which is that central banks, the Federal Reserve and central banks around the world were creating too much currency. They were creating more currency than goods and services were being created through the economic activity. So as a consequence, you had too much currency chasing too few goods and services, and inflation is the result. And with crude oil now, it recently touched 120. It's backed off to 115 US dollars per barrel. We're going to see more inflation in the weeks and months ahead before it gets better. And I'm not sure it's going to get better because we still have negative interest rates. In other words, if you look at, say, the 10-year US Treasury, which is about 3%, inflation rate is 8%. Even if you earn 3% interest rates, you're still going to be losing 5% in purchasing power terms over the course of a year. What Paul Volcker did when he was head of the Federal Reserve was raise interest rates so that real interest rates were positive. And I don't see how the Federal Reserve is going to raise interest rates high enough to get to positive interest rates, which is what's necessary to stop inflation. So for me, inflation is a big problem, and it's going to get much, much worse in the weeks and months ahead.
Mm-hmm. And it really does all just come down to the Fed policy?
It comes down to central bank policy and what central banks are doing. They're funding government spending. They're not taking care to preserve the purchasing power of the currencies that they're issuing. And if you do that, you ultimately lead to hyperinflation. That's what's happening in places like Venezuela. That's what happened with Weimar Germany back in the 1920s. The central banks ran amok. And as a consequence, they destroyed the currency by giving the currency to the government, which the government then spent, and there were far too much spending by the government. It ultimately destroyed the currency.
Now, the Bank of Canada has raised its policy interest rate to 1.5%, its second consecutive 50 basis point hike, and said that it was prepared to act more forcefully if needed to bring inflation back to target. Do you think that the Bank of Canada is just going to take its direction from the Fed?
They have to if they want to save the Canadian dollar and stop inflation. The Bank of Canada, like all other central banks, are so far behind the curve. I mean, 1.5 interest rate percentage compared to what is the inflation rate in Canada now? Similar to the US, they're like 8%, maybe even a little bit more. And crude oil prices going higher. And they're so far behind the curve that they have to keep raising interest rates, and that ultimately is going to weaken the economy. We've been, throughout monetary history, we've been going through these cycles of boom and bust. We're just entering into a bust. The last one was 2008. The next one is going to be unfolding in the weeks and months ahead, in my view.
Now, what do you think are the implications of monetary policy on the precious metals market?
Well, people are concerned that they think that interest rates, when they rise, it's negative for the precious metals. But in fact, it's the opposite. If you look at what happened in the 1970s, the last great bull market in the precious metals, interest rates kept climbing and the precious metals kept climbing until Paul Volcker got a 6% real interest rates. In other words, the interest rate was 6% over the inflation rate. That was enough to convince the market that he was going to save the US dollar, which he did. And ultimately, the precious metals then moved from an overvalued level to an undervalued level. Right now, the precious metals are very undervalued like they were back in the early 1970s. So as interest rates rise, if in fact central banks raise interest rates in the months ahead, precious metals are going to rise with it. Precious metals are going to respond to inflationary pressures because the precious metals do preserve purchasing power. I sent you a chart of crude oil prices as an example of that. If you look at the price of crude oil in terms of 4 different currencies, the dollar, the British pound, and the euro, they buy much less crude oil now than they did back in 1950. But an ounce of gold buys the same amount of crude oil today as it did in 1950. I remember as a young boy growing up in Ohio that my parents could drive the family car into the local gas station and fill it up with $2, 2 silver certificates, which were in circulation back then, 4 half dollars or 8 quarters. Well, if you took the silver content of those 4 half dollars or those 8 quarters or 2 silver dollars, you still have enough value to fill up the family car. So both gold and silver preserve purchasing power during inflationary periods. And as a consequence, to protect your wealth, to protect your purchasing power, you need to own some physical gold and physical silver.
Now, gold's been holding steady around the $1,850 level. What is your read on the recent price action of gold?
Well, we just recently went over 2,000 and we came back again in US dollar terms. I think it's just retesting support. And with crude oil now approaching $120 a barrel and more inflationary pressures building in the economy, I expect you're going to see new record highs in the US dollar price of gold before the end of this year.
And what about silver? What do you think needs to happen for silver to leg up higher?
Yeah, it's been a little bit more difficult. They call it the devil's metal for a reason, because as far as traders are concerned, it's very difficult to predict its short-term trends. But, an ounce of silver buys the same amount of crude oil it did 70 years ago as well. It's just much more volatile than gold. So I'm expecting silver to get over $30 before the end of this year and probably test that $50 level again, maybe even get over 50 by the end of the year. So basically, I'm looking for a double in the silver price within the next 6 to 12 months. I think it's likely. And then when silver gets over $50 a barrel, that's when the bull market in silver begins. Remember, silver is only 50% of its 1980 high. What other commodity is so cheap compared to its 1980 prices? All other commodities are at records, but silver has been lagging. That's about to change. We've been going through a huge period of accumulation where it's being moved from weak hands into strong hands. And I think that's ultimately going to propel silver higher in the months ahead.
Now, in light of recent sanctions on Russia, global demand for gold is said to have increased 34%. Do you think that sanctions imposed on foreign exchange markets have the tendency to increase the use of currencies alternative to the US dollar and the euro?
Yes, I do. In fact, anything that governments do to disrupt economic activity or to raise questions about an individual's wealth or prevent an individual from transacting ultimately causes people to doubt the security of the system that as it presently exists. So they go to things that don't have counterparty risk. So when you own physical gold or physical silver, you're not dependent on a bank, you're not dependent on a government. So, I think the geopolitical uncertainty that's prevailing today has caused an increase in demand for gold and silver. But what people have to understand, there's a difference between physical gold and paper gold. Paper gold is when you're buying something that is not physical. It's a representation of gold. Physical gold is different. It's actual metal sitting in a vault. A lot of the paper products out there give you exposure to the gold price, but they don't have the ultimate security, which is avoiding counterparty risk, because you have the counterparty risk of the person or the institution that's promising you to deliver the gold at some point in time in the future.
So what do you think is the best hedge against inflation?
I think, obviously gold and silver are good hedges against inflation, but they're money. But basically any tangible asset is a good hedge against inflation. A house is a hedge against inflation in a sense that it's providing you shelter, and that's its usefulness, and its price will go up as inflationary pressures continue to build in the economy. But basically any tangible asset is a hedge against inflation. And that's the key I think people should be focusing on in an inflationary environment. Focus on owning things rather than promises. Own tangible assets rather than financial assets. And I think that's the central theme that people have to be looking at in order to get through this inflationary problem that we're working our way through.
Okay, great. Well, thank you so much for joining us, James. One last thing before you go. You just recently published your latest book called Money and Liberty in the Pursuit of Happiness and the Theory of Natural Money. What is the theme of the book, and could you give us some color on it before you leave?
Yeah, I'd be happy to. What people have become frustrated in recent decades is that they don't feel like they're in control of their destiny. We've seen it in Europe. The UK left the EU in order to take back control. And I think people want to take back control of their government. And the way you do that is two things, not only free and fair elections, but control of the monetary system. And you have control of the monetary system when it's based on natural money, which of course is gold and silver, which is the provisions of the American Constitution. And we've abandoned that in the 20th century. And as a consequence, the Federal Reserve and the currency that it circulates is unconstitutional currency. We have to go back to the basics. We have to go back to what worked for 170 years and avoid the problems that we're seeing today. Few people do not realize that the first currency of the country of America was the Continental, and it collapsed in an inflationary spiral after the War of Independence. And the framers of the Constitution created the monetary provisions to avoid that problem occurring in the future. And it worked for 170 years, but we've abandoned it. And as a consequence, we're seeing the same inflationary problems that the framers went through. So it's quite sad, but we have to get back to natural money, constitutional money, physical gold, physical silver. And I think that will put the economy on the right course and also do wonders to develop social harmony.
Definitely. Okay, well, that's all we have for you today, James. Thank you so much for joining us. It's been so nice to hear your thoughts on everything.
Thank you very much. It's been great speaking with you.
Thanks so much for tuning in today. You can also check out James's latest book, Money and Liberty in the Pursuit of Happiness and the Theory of Natural Money, in stores today. And don't forget to check him out on Twitter at FGMR. We'll see you next time. Bye.